Welcome aboard the Pilot Money Guys podcast, where our mission is to help professional pilots build and protect wealth on their journey to financial freedom. This podcast is brought to you by Leading Edge Financial Planning.
Hello, Andy, and welcome to the Pilot Money Guys Flight 131. We're getting up there. Welcome. I'm your host, Charlie Mattingly, co-host Andy Christopher. Thanks for joining, Andy. We're glad to have you again today as well.
Yeah, co-host for a little bit.
Yeah, that's right.
Then I sneak away.
We pulled you in here to talk about some exciting stuff. So you and I get to talk about some really exciting. We're going to talk SpaceX IPO. And then for those that are really excited about tax strategies, LLCs, and what pilots should do when considering an LLC, limited liability company. Can it help you? Can it hurt you? Tax, whatever. We're going to talk about all that stuff with Kevin, the Professor Gormley, and our new star CPA, Bailey. Yeah. Do you know how to pronounce her last name?
Allman.
Allemand.
Oh, interesting.
It's French. So you got to stick around to the end because we give Bailey, I'll give you a hint. She's from Louisiana, Cajun. We give her a call sign at the end, but she's one of our superstar CPAs that talks about tax strategy, LLCs, when to use them, when not to, what are they good for? And so hang on for that. But you and I get the exciting part. We get to talk about SpaceX IPO, what's all the rage. But first, Andy, our mission is to deliver actionable ideas, simplify the complex, cut through financial noise, all to help build mindset for financial life success. And you've taken like a 100-page document about IPOs. You're going to simplify that. You're going to tell us what that is in about 2 minutes here.
Yeah. This is, not to foreshadow what we're going to talk about. I feel like people will kind of know. You know where the SNL skit, Debbie Downer, and it's like
I know.
Everyone's having a good time. And then it's like,
party pooper.
Party poopers. Mm-hmm. Yeah. It's a party. It's a party for
it is a
SpaceX.
Party. And you're about to ruin it. I got a feeling, but it is fascinating. We'll talk about it. And again, we're going to tell the truth, the whole truth, nothing but the truth. And sometimes it's less exciting than maybe some embellishment of other things. But so Andy, we've gotten this is questions from the flight deck section before we get into the meat of the mission. SpaceX is preparing for what could become the largest IPO in stock market history, targeting $1.75 trillion valuation. Trading is expected to start, I think, mid-June of this year, 2026, June 12th.
Yeah.
This is going to be unprecedented and could be one of the most valuable publicly traded companies once this happens, surpassing Tesla and right up there with Alphabet and Amazon. Andy, this seems like a no-brainer, right? Why should we not be part of this? This is history in the making. All of our hopes and dreams to become rich are hinged on this moment.
Yeah, if you were an SpaceX investor 10 years ago, then this year you'll probably be rich. You'll probably be rich.
Yeah. Private when it was obviously private.
Private, and you couldn't. So that's the life of a company, and I think, Charlie, like both of those things can be true, right? This can be an unprecedented, the most valuable company to ever IPO, and you can still not have great returns, right? And so it's like, and we say this all the time, maybe not in the context of an IPO, but just in the context of companies, right? There's great stock prices, there's great returns, and there's great companies, and those three things are not necessarily always the same thing at any one time, right? And so I think it's disentangling that.
I got to repeat what you said. Super important. And like you said, not just for IPOs, for any stock, any company, we could absolutely know beyond the shadow of a doubt, it is an amazing company, does amazing things, makes technically speaking, a buttload of cash, but it doesn't mean your stock price is going to go up. It doesn't mean it's going to be a good decision to buy that, because of the next thing we'll talk about in any company, especially IPOs, is that all that massive expectation is kind of priced in there. Is that fair to say?
I think that's exactly right. Yeah. And I think, to kind of use that example, right? Like Apple, I've had an iPhone since 2007. I'll never not, like, you put a Samsung phone in my hand, I'll just like,
Your hand melts on.
Yeah. But that doesn't mean like Apple's always going to be a good company or a good investment. That's a future expected return type of discussion. But
in fact, Apple, I'm sorry to interrupt you. Apple, people look back, I should have bought Apple. I just got done watching in the airport. I was traveling this weekend, the Steve Jobs Netflix.
Nice.
But I knew this anyway. You knew this. Apple was nearly out of business. They were on the verge of bankruptcy at least once. And so you've got to survive those in the case of Apple. But anyway, sorry, I couldn't resist because it's a perfect example.
And maybe just take a quick step back. Like, what's an IPO, right? Like, why do you even do it? And generally, companies do it because they want to raise capital. That's the most efficient way to raise money to grow your business is via the public markets where shares trade hundreds, millions of times a day. That's how you get really good price discovery. And historically, it's been more small cap companies. So smaller companies that have gone to IPOs sooner. And we've seen more of a transition where companies are staying private longer and before they go public via an IPO. And this is sort of a manifestation of that in like a very big form of SpaceX just didn't go public sooner. And so now it's a $1.75 trillion valuation at the initial public offering. And so I think as an investor, you would say, well, you don't get to participate in that day 1 to 1.75 or whatever it was when SpaceX was created. It was probably more than $1, but not 1.75 trillion of them. So your starting point is 1.75 trillion as an investor. Whether that's good or bad, I can't tell. The market will tell you quickly. We have history to sort of look at. And I think that, as you alluded to, professor at University of Florida, Jay Ritter, he's like the IPO man. Yeah. And he just unloads a bunch of data. There's some really interesting factoids, I think, that just come out. He updates it all the time. One of those that struck me was average first day return of IPOs is 2001 to 2024. So a pretty good time period was about 18%. Right. Yeah. So like the very first day of trading,
day one,
18%. So now you ask yourself a question, like, how do I get that? Right. Can I get that stock on day one? Because otherwise you don't get to participate. You get the after day one return, which is not so good.
Not 18%.
So not 18% there. He adjusts it for the market and some style, but essentially average 3-year return from 2001 to 2024 of IPOs has been underperforming the market by about 14 on a market adjusted basis and 13% on a style adjusted basis. So, that's after the day one. So if you don't participate on day one, your chances of you outperforming just buying an index fund are pretty low. So Charlie, I just find that that's interesting. I like the numbers, the data, and it just kind of suggests that, IPOs are, they're risky. There's plenty of reasons why, and it may not be the best place for your dollar of an investment.
Yeah. You're just being negative, Nelly. That's all there is to it.
That's right. Debbie Downer. Yeah.
Well, it's true. And I'm joking and it's, we got to tell the truth and it's exciting. There's a lot of hype. Andy, I think what we'll do is we're going to go ahead and switch over to the meat of the mission as far as tax, LLCs. It's exciting, but you and I are going to continue this conversation on YouTube. So go check us out on YouTube, SpaceX IPO, Leading Edge Financial Planning. And we're going to talk more about this. Why not, pros, cons. But thanks, Andy, for that. We're cutting away to the podcast 131. Enjoy that with the Professor Gormley and Bailey Alamon. All right. Welcome to the Pilot Money Guys. Today, I have special guests returning from the cave, i.e. tax cave, Kevin Gormley, the professor. So Kevin, we're glad to have you back today and glad to have you out of the tax cave.
Yeah, the sun is shining bright today, Charlie. Right. Thank you so much. Good to be here.
Absolutely. And special guest. Bailey Alamon. Alamon.
Great pronunciation.
That's right. And I was told before we got on here that is Cajun, and it is the French word for German. which is confusing.
Yeah. What's up with that, Bailey?
I think my family just came from maybe Germany and they were in France at one point. I'm not entirely sure,
Nice.
but they ended up in New Orleans. That's about all I know.
Okay, good. Best thing about New Orleans is the food. That's good though.
Yeah.
And big news, I'm going to just broadcast it right now, Bailey. You're getting married soon. So Allemand will be turning to Loving Good.
Living good.
Living good.
Living good. I like loving good. Loving good, living good. Also, well, thanks, Bailey, for being with us. She is also a CPA and a new member of the Leading Edge team. Also out of the tax cave as well. Bailey, we're glad that you're out. Get to see the sunshine, get to go do fun things that normal people do and sleep and all that good stuff, right?
Yep. The nice thing is that tax season is when it's cold and dark.
That's a good point. It all goes together. It's all cold, all dark. But we're glad to have both of you on Flight 131 today. I'm your co-host today with Kevin Gormley as host, Charlie Mattingly. And today we're going to talk about tax strategy, LLCs. What does that do for us? We have a lot of our pilot community, very intelligent, high achievers, and they do other stuff besides fly a lot. So we're going to talk today about how to do that the right way, the tax smart way. And a lot of that, Kevin and Bailey, centers around, do we need an LLC? When do we need it? Why do we need it? What does it do for us? So there's a lot of misunderstandings about what an LLC can do for us. But Kevin, what are your thoughts right off the top of your nugget?
Yeah, the way it comes to us usually, Charlie, is a pilot will contact us and say, hey, I just flew with this guy, and this guy was talking about having an LLC. Do I need to get an LLC? That's probably the first way that we hear about it. But it's not always the co-pilot that inspires people to reach out and ask us about it. Bailey, you mentioned a lot of times clients will just ask, do I need one, right? How have you heard it from clients?
Yeah, a lot of times, especially if they want to start a business, they'll say, would you recommend it? When would I need it?
Yeah, absolutely. And part of it is we've got people starting LLCs without businesses sometimes, right? I'm going to start an LLC. So, and then the next sentence sometimes is, so I can save some taxes, right?
Yeah. That's the second most common reason I hear, Charlie, is someone will call and say, I need to get an LLC. And I'll say, okay, how come? To save on some taxes.
Yeah.
And, very intelligent people. And the idea to save on taxes is to have a business that allows you to maybe deduct some expenses and lower your income that comes from the airline. So it does make sense. It's just that the LLC itself is maybe not the tax saver that people believe.
Yeah, we'll talk about some tax, we'll talk about real reasons to have LLCs. What does it actually do? And some real ways to be tax smart. But one of the things that we as human beings get excited about, sometimes we get excited about complexity, because complexity makes us gives us a sense of control. It gives us this sense of sophistication and intelligence. So we're kind of naturally drawn to that. High achieving people think, oh man, if I have this holding company, layer these LLCs, that's what the wealthy people do. So that's what I'm going to do. Well, it doesn't always work that way, right? So there's some misperceptions out there. There's lots of people on TikTok talking about how wonderful, all these holding companies are and these shell companies, et cetera, et cetera. But we'll cut through that noise today, talk about what really works. And Bailey's going to help us stay out of trouble with the tax man and not to raise any red flags either, right, Bailey?
Yep.
Yeah, absolutely. So Kevin, what does an LLC do? When do we need it? What are we thinking about here?
I'll give you an analogy, Charlie, the gym membership analogy with an LLC. Forming an LLC is like buying a gym membership. You don't get in shape just by having it. You still have to show up and do the work. So the LLC, all it does is basically you're signing up with a local government, a state government. You're forming a business. And so, but you're forming a corporation. And so you don't really need to have an LLC to form a business. You can just say, I'm in business. You can just tell people I'm starting something. You don't even have to tell them the name, and you can start a business. And when you start a business, what's the goal of business? Making money, right, Charlie? So the LLC is more of a formality. But then when you start making money, it's important to have an LLC because then it's asset protection. So LLC is not really a tax dodge per se. It's more of a way to protect yourself from whatever business you're running. Yeah. Bailey, can you try to say that better than I did? Because that was suspect at best.
Yeah, LLC is a legal designation, not a tax designation. LLCs can be taxed a variety of ways for tax purposes.
Yeah. Kevin, you said one thing there that confuses me now. I'm starting a business to make money. I just want to lose money to save on taxes, Kevin. I need to show some losses. What happens if I, start my LLC and then I show some losses forever? What about that? What does that do for me?
Yeah. Well, I mean, that is one way to go, Charlie, is that you end up losing a bunch of money in your side hustle. And then you can, tell your wife and children or your husband and children, or just you can tell your friends, hey, I just saved on taxes. I just saved a boatload on taxes. And then, the next question that they should ask you is, well, how did you do that? And you say, I lost a bunch of money. And then all of a sudden the conversation ends. The person's like, what? You're losing money on purpose to save taxes. So I think what people really mean when they say they want to lose money is they don't really want to lose money, Charlie. They just want to save on the tax.
Yeah. Tax is so painful. It hurts. And what we find, and we feel it, our pilot community talks about it. It's like, this is so painful. I'm done giving 35, 37% or more to Uncle Sam, and it just feels painful. So we get that emotional pain point. However, we've got to really, like you said, Kevin, and I'm being facetious, of course, we got to see through that, be disciplined and not lose money. In fact, Bailey, if we lose money multiple years in a row, I mean, we talk about red flags. What does the IRS, what do they think about that?
So the IRS, first of all, they're going to be concerned with, is this a hobby or is this a business? Part of the criteria for whether it's a business is if you're in it solely to make a profit. So if you're not making a profit for years on end, the IRS may ask, is this truly because you're seeking a profit? Usually they expect a profit within the first about 5 years. Mm-hmm. It's not a set rule, but.
Yeah. And if you're not making profit, you're deducting all these things, I guess. And that's where the tax savings come in. You get to have some deductions. But then again, the IRS might say, no, this is not legit. And you're going to, pay back and paid penalties and things like that. So that's
right. Because you can't deduct hobby losses. So if they say this is actually a hobby, then you're on the hook.
Yeah. Absolutely.
So, Charlie, I got an idea for a business. I'm going to buy a Lamborghini and I'm going to create a YouTube channel that's all about driving my Lamborghini. And I want the Lamborghini anyway, because who doesn't want one? But the problem is that the IRS might not agree with me that I'm trying to make money on the YouTube channel. So that's really where the hobby comes in. Anything that's really fun to do. If you say I'm going to, it's sort of like when you were a kid and you said, I want to be a video game tester. I just want to play video games. So anything that's really fun, like horses, racing, boating, all the fun things, flying airplanes, like the IRS knows what is fun and what is not fun, so it's pretty obvious. And they have a list of those things that, like we all think, well, hey, I'm spending this money anyway. I might as well have a business. I might as well lose money. And then I can offset my flying, financial planning, or whatever other income because I'm going to lose the money anyway. And so that's just a slippery slope. That's a difficult thing. But the main item here is if you're going to spend $100,000 on something and then lose all the money, to save $37,000 of tax, is that really a smart thing? Because you do have to buy whatever you say you're buying, or cheating is not something we recommend.
Yeah, absolutely. And sometimes people push that limit a little bit. We're very careful to distinguish between the evasion of taxes and the avoidance of taxes. One's illegal, but nonetheless, people can do all kinds of stuff on their tax return, and it all is if you get audited, right? And so that's why Bailey's going to talk about some of these red flags today. But back to the LLCs, we've talked about the myths, these top 10 myths. We like to say top 10. I don't know that we actually have 10. Maybe we'll fill in 10 here, but maybe people count for us, 8-ish. But anyway, so the one we've talked about here already is number one, an LLC myth. LLC will automatically save me a ton in taxes. And we know, Bailey, you nailed it. It's just not true. It has nothing to do with the structure. I think I say this correctly. The structure LLC. It's how you file your taxes, and there's multiple ways to do that. So, but anything else to add on the taxes and the LLC, the misunderstandings there that people face on that? Any other thoughts on that?
Well, I'd ask Bailey to comment a little bit about the different tax structures you could create that might save you on taxes, Bailey.
So if you're not wanting to pull out a lot of your earnings, there is the C Corp designation, but a lot of people don't want to go that route just because when you do distribute the income, it's going to be taxed again as dividends. So it gets taxed at the business level and then at the personal level. There's also the S Corp designation, which could help save on self-employment taxes. The nice thing about an S Corp is that instead of just taking distributions and paying self-employment tax, you pay yourself a salary. So you wouldn't pay self-employment tax on that salary. It would function kind of like your W-2 from your job.
Yeah, that's where the savings comes in, is that self-employment tax, Bailey. Is that right? Because I've heard a lot of our pilots talk about, hey, I've got an airplane, I'm going to give some instruction, and I should be an S Corp. That's what they tell me, and I'm not tax savvy enough to know anything about an S Corp except what you just said, Bailey, and that there could be some savings on self-employment tax. But Kevin, I think you got to have quite a bit of income for that to happen, right? Is it kind of like a threshold where that really helps?
Well, again, the issue with saving taxes is you only save taxes if you're making money. And so if you're losing a bunch of money, you're not paying any self-employment tax. So I set up an LLC. I designated it an S Corp. I'm really quite sharp. And then I lose a bunch of money. Now I have to file an S Corp tax return. I also have to pay myself wages if I'm planning on ever making money. So there's lots of things you have to do. Usually you have to have a CPA firm or at least do it yourself to be able to have wages and the rest of it. So the other part of it is, Charlie, is that there's really two tax lanes that we have to be concerned about with a side hustle or a business. The first tax lane is the income tax. And so everybody knows the income tax. Everybody hates the income tax. But then we have the self-employment tax, which is the 15.3, also known as FICA, Social Security, Medicare, all that kind of stuff. Now, what's super interesting to me is most of our pilots don't pay Social Security on their side hustle. Why is that? And Bailey, maybe you can look up the amount of self-employment tax that's still taxed at 15.3. But because most pilots are earning more than the maximum amount of 15.3 that you pay the FICA, they've already maximized that. So they're not going to save on the Social Security tax at all if they form an S corporation. They're only going to save on the Medicare portion. So there's just not a lot of juice to squeeze. Is that the word?
You got
juice to squeeze. Yeah, there's just not a lot of juice to squeeze with an S corporation for someone that's already high income because they've already paid all of the Social Security. So 6.2% times 2 is what they would save if they weren't making any money, Charlie. But since they've already paid that tax through their flying income, they actually don't save any self-employment tax on the FICA portion.
Yeah, that's huge, Kevin, because what you also said in there that was important was you got an S Corp of, tax return now. You're probably paying someone to file that tax return that really didn't save you any taxes. And there's other complexity. You might even pay somebody to a lawyer to make these things happen. And that's the point is like, we don't need complexity until we really are making money, making lots of money. And quite frankly, that's what some people want to avoid. They're trying to save, because the more money you make in this business, the more taxes you're going to pay. That doesn't mean you shouldn't do it. We have lots of pilots that have started amazing businesses and have gone on to become very successful. But nonetheless, be careful of the complexity. It may not do anything but cause you to pay more money to your tax accountant and tax attorney. But Bailey, anything to add on that part?
Also adds more deadlines. If you elect to be taxed as an S Corp, you have a March deadline on top of your April deadline. Yeah. So if you're not good with deadlines, something to think about too.
Yeah, avoid it. But no, there may be some reasons to have an S corp that's beyond the scope of this discussion. But I love the fact what you nailed it, Kevin. Like there may not be any tax savings at all, but now the other myth that we talk about for an LLC, and this will quickly get outside of our scope of expertise, but this idea of asset protection. One of the things I read Kevin and Bailey online was like, it's a limited liability, not a no liability company. So Kevin, can you talk to that? Like it obviously does make sense sometimes to have an LLC for liability protection, but what are the limits? Where does this break down possibly?
Well, it's sort of like, I would say the joke, and it's not really funny, but hey, I'm going to create an LLC, then murder some people. Mm-hmm. And the LLC is going to protect me. Well, no, right. Not at all. So the limited liability comes down to you operating a business in the proper fashion and doing things ethically, prudent, person rule, that kind of stuff. If you commit fraud, if you personally guarantee debts, by the way, so many times, Charlie, you say, I'm going to create an LLC and borrow a bunch of money. Good luck with that because you created a new LLC. The bank ain't going to give you no money because you just created an LLC. They're going to say, Mr. Gormley, I need you to also have a personal guarantee of these debts. So this whole idea of create a LLC, use other people's money, that kind of thing, it doesn't really work for the most part unless you have a long track record with the LLC. And and then the third really most important part, and this is I think it's gotten a lot easier over the years because of credit cards and banks. You can set up an LLC does allow you to open a bank account and a credit card in the name of the LLC. But if you still use the LLC credit card for your vacation because you want to get points, you are doing what's called commingling funds. And if you start commingling funds and you act like it's you say in the notes, Charlie, your personal bank account, personal wallet, if you do that, well, then you really haven't created a separate entity. So it will give you some limited protection. And again, we are not attorneys, but we do like asset protection. We find that to be probably the number one reason why someone should consider an LLC. And I'll let Bailey comment if I missed anything or if she has something else to add.
Just another name for it. It's also called piercing the corporate veil. If you don't keep separate records and money for your business and your personal.
Yeah.
That's a good way to think about it. Piercing the veil.
It sounds cool.
When you pierce the veil, you pierce the person. I guess that's behind the LLC. So that's the good legal talk, Charlie.
Yeah, absolutely. And I think the practical thing that I take away from this is treat it like a real business, even if you're starting. And that means keep good records. Like you said, stay away from fraud. That's always a good idea, right? Stay away from fraud is going to help. But as long as you're keeping things separate like a real business, because even when you start, if you have intentions of that happening, then you want to treat it like that from the start. That helps the IRS, to me, Kevin Bailey. It also, to me, it would be legitimacy in their eyes. Like, oh yeah, this person is doing it right. It might limit the red flags that are raised in their eyes. It would seem like to me. I'm not an auditor, of course, but I think too, I'll comment a little bit more on the LLC. To me, I think the most common one we see on this is the rental properties. Should I have my rental properties in LLC? I've asked attorneys this before. I think they'll probably say yes pretty quickly on that. But I think the other practical things on that is good record keeping, separate record keeping. And oh, by the way, Kevin, you nailed it. Like if you got a property, it's not fraud to not do these things, but have the right safety mechanisms that you're supposed to have. Rails. I had rentals for a while. You got to have rails on this stairway. You got to, if somebody gets hurt and you've not done what you're supposed to do, then you're going to get sued. So those are good asset protection things in addition to the LLC. And so those are things that are practical and helpful as well. But Bailey, what do you thought? Anything else on just this idea of the corporate veil protection and all that good stuff?
Yeah. I would also just encourage people that the record keeping doesn't have to be super fancy. You don't need to go get a QuickBooks account. You can just keep records in Excel. It's just important that you're doing it.
Mm-hmm. Yeah, you nailed it.
But Charlie, one more thing about the protection, it's sort of like, a suit of armor. You're going to have some weak spots wearing a suit of armor, but an LLC, using umbrella coverage. You want your suit of armor to be as strong as possible. And that's the reason why if you do ask an attorney, should I do this or that, the attorney wants you to be protected. So yes, all of the above is a great way to protect your personal assets. Now, you can also go down the path of just, wigging out and thinking you need to protect everything and have an LLC in a state like Nevada or Delaware, where sometimes people can't even see that you own the LLC. Mm-hmm. And so there are many things online that you will see. There's many ideas that, hey, you can make this thing like no one knows you have any money in it. But again, we sometimes see people do all this stuff and they don't have a business yet. Mm. And it doesn't create the income or the wealth. It's a nice fancy way to protect everything, but it's nice to have earned some money first before you start going down these paths.
Absolutely. And, before I pivot away from the liability subject here, because it's an important, we could do an entire podcast on that one because it's important. But in addition to the LLC, good record keeping, like Bailey talked about, don't forget to have the liability umbrella policy insurance in addition to the business structure or LLC as well. All right. Myth number 3 that we're going down. Kevin, Bailey, if I have an LLC, I have a real business. What is that? True or false? What is that?
Bailey?
Argue that you have a real business once you're doing business activities. You can have an LLC and do nothing.
That's right. You're right about that. You can't just have a shell of a company is the point there. And IRS wants to see that you're making money eventually, like you said, because obviously they're pretty aware. A lot of people are trying to have shells of companies deduct things that aren't really deductible. So they're probably on the lookout for those types of things. But Kevin, what do you think?
Yeah, well, I mean, I'll use the suit analogy. Like you see people wearing suits, and an LLC is like putting on a suit. It makes you look more professional, but it won't close deals for you or create business. So an LLC, having an LLC, if an IRS agent sees you have an LLC and you're like, hey, look at my LLC here, the IRS agent isn't really supposed to care. Now, it does show some intent because, this is all about intent, Charlie, trying to make money. If anyone ever asks you from the IRS, are you trying to make money in this business? You always say, of course. If you're not, then they'll say it's a hobby. So yes, having an LLC is not bad. Having it on your business cards looks professional when you're doing business, but it doesn't create a business per se. A business can be created by me just announcing to the world or not even announcing it that I'm starting a business.
Yeah, it's interesting. One time I was talking with someone about this, having a real business and you need to make money. Otherwise, like Bailey said earlier, those losses that you previously deducted will be disallowed and maybe penalties and whatnot. But somebody told me one time, they were like, well, hey, so-and-so airline, they've not made money in 10 years. And I was like, well, it's pretty clear though that they're in business, I would say. So it's not a kind of hobby, but nonetheless, those are some things that we think about as far as making money or not. But again, sometimes people go, hey, I've done this before, I've not made money. And I would say that it's just a roll of the dice, right? So just have good records for sure.
Yeah. And Charlie, I don't want to make people nervous here that, I think the issue here is that you really do want to make money. Mm-hmm. That's the whole reason to start a side hustle. That's the whole reason to start a business. I want to make money.
Absolutely.
So if you want to do that's good. And again, make the money, drag the LLC along with you to protect you.
Yeah, absolutely. So can we talk for a minute, because we're kind of, down in all these good ideas that people come to us with, and we're kind of like the old fuddy-duddy party pooper, whatever. But how does a business person save on taxes? And Kevin, I think you nailed it earlier where, there's a few years where, most businesses don't make money in the first few years. And so there's going to be some losses to deduct. But let's say I do start making money. Well, where are the tax savings in a business? Is this just a total myth? Where are the tax savings, if there are any at all?
So I'll just say flow through. I'll just use the phraseology flow through. So the reason why partnership taxation, if you have somebody else you're doing a business with, or a Schedule C type business, the reason why flow through is good is, Charlie, like you said, it used to be that you start up a business, maybe not an app that goes big overnight, but you start up a business and you start getting your infrastructure together, you start getting everything ready, and you lose money at the beginning, and that's all good. But eventually you do want to make money. But in the beginning years, you do get to lose money and save on your flying income and all that other kind of stuff. That is true when you're losing money. Bailey?
I'd say record keeping helps a lot. You can't deduct expenses that you haven't tracked. That'll help you save taxes.
Mm-hmm. Yeah, absolutely. And you may do it right, and the IRS shows up at your door and you say, hey, I did it right. I did everything exactly like I'm supposed to. And they go, show us, and it's kind of like in the airplane. If you didn't document something in that logbook, it didn't happen. All right. The one exception I'm going to point out here, because I think it's a major common misunderstanding, is that if I go buy a rental property and I go buy me, because I really need a skid steer, Bobcat, they're about 80, 90, 100 grand, probably used, but I'll need one for my rental property. So I'm going to buy that, and then I'm going to deduct it against my pilot income at my airline. And there's a lot of sticky assumptions there. There's a lot of misunderstandings. We can go to flight. We've done these before, Kevin, Flight 52 with Gina Roth. She did awesome on real estate investing. Flight 91 with Micah Porter, one of our top 10 of all time. Check those out for more details on this. But I think we got to get out there that, if you got an active business where you're doing, Kevin, like I did in the world of this business while I was flying, clearly an active thing going on there, but there's a little exception that we probably ought to mention about real estate. Kevin, you want to touch on that just a tad bit, just so we alleviate any misunderstandings here?
I think it comes down to depreciation, Charlie, the depreciation shield. And, again, on podcasts, they talk all about the good part of it because it's fun to think about, like bonus depreciation and Section 179. So I buy a brand new tractor. I have a farm. I buy the tractor in December and I take bonus depreciation. Let's say the tractor is $100,000. Whammo, I get $100,000 of losses against my other income because it's a legitimate business. I really did start it. I bought something and I get to deduct all of it. So the issue, though, is that, again, it has to be a legitimate business expense. And I joke, and I mean this sincerely when I say this, though. I joke, but I also mean this sincerely, that if you really do want to buy a tractor and you want to tell your spouse that you're buying it to save on taxes, that's okay. Because that's sometimes, now, again, you might even be misleading your spouse. So maybe I shouldn't have said that. But that's a lot of times, like, people will say, look, I'm buying a plane. I want to buy a plane and I want to save on taxes. It's like, all right, are you going to use the plane for more than 50% business? Can you prove that there's a business, et cetera, et cetera? And they say, no, but I still want to buy the plane. Mm-hmm. So if you still want to buy the plane, just buy the plane. Just know you're not going to really save on taxes. Now, the other gotcha here, Charlie, is if you take bonus depreciation in the first year and then you start making money in subsequent years, guess what? Bonus is over. It's back in the past now, and now you're making money and you have to pay taxes on it. Worse is if you sell your tractor in a year, then you got to recapture. Those are the dirty words of depreciation. You have to recapture that depreciation because it has a useful life and you took it all up front. Mm-hmm. So that's really what you're doing with bonus or Section 179 is you're putting it up front, you're taking it all in. Again, just make sure you're doing it and it's legal. You're following the spirit and the intent of the law. Bailey, what do you have about this, about bonus? And then we can get to the cost segregation.
I think Bailey's got an advantage here because she knows all the tax rules. She can buy whatever the heck she wants and tell her new husband that, hey, I'm doing this for taxes. So Bailey, you don't do that. It's a bad foundation.
I was going to say, side hustle is not in the works right now.
So Bailey, what do you think about the bonus and all of that?
Well, something I'd like to add is that we're talking about a rental. That's generally passive income, passive losses. That's not necessarily going to offset your W-2 income. So something to think about. A business would be different. You can offset your W-2 income. But yeah, I would agree that the biggest gotcha is depreciation recapture. I think that's what we see take most of our clients by surprise, not just with something like a tractor, but the rental property itself. They go to sell the rental property, don't know about depreciation recapture, and they get hit with this big tax bill.
Yeah. Turns out I hate to say this out loud, I'm going to get shamed probably, but the IRS kind of pretty smart. They're pretty smart on kind of getting their money back, unfortunately for all of us. But I think the thing I'll stress there, Bailey, is that I want our pilot audience just to be, just be aware that if you go buy a rental property, that's probably not. There are some exceptions that, I reference those other podcasts, but it's probably not going to offset your airline income. So just be careful of that and do your homework before you go in. Kevin, what you got?
What about the short-term rental loophole, Bailey? What's the short-term rental loophole? And then how do I do a cost segregation study to really supercharge the losses?
I think I'm going to have you answer about the cost segregation, but short-term rental, I believe it's an average stay of less than a week per renter, and then it would become active income, and you can offset your W-2 income.
Yeah.
So something like, think like an Airbnb.
Yeah. So an Airbnb, it kind of pulls it out of the rental type of property. Rental property is passive. And when you have a business that's less than 7 days rented, then it becomes a business. You have to clean, you have to fix everything up, you have to make it look good, you have to talk to people. It's a business. It's sort of like selling, back in business school, it's like selling a widget. You're selling your service there with the short-term rental. So the cost segregation is basically that. This is exciting stuff, Charlie. Every asset has a depreciation schedule. And, the rental property itself has 27 and a half years. That's a long time. And so if you do a cost segregation study, you can bring some of the things that are like fixtures and,
windows,
flooring and that stuff, windows. And you can take all the shorter term depreciation stuff. And since it is shorter term, it's not 27 and a half years, you can do the bonus depreciation. And so therefore, again, you can front load the depreciation on a short-term rental. The gotchas here again, and we've seen this, is that if a couple years later you want to sell it, depreciation recapture is a thing. And so sometimes it makes people not want to sell the property because of the recapture. And then number two, when you make money in the future, because you've already taken your depreciation, a lot of it up front, you end up paying taxes again, darn it. So anyway, this is starting to depress me now. But, I think we'll come to the end about what is the best ways to improve your tax situation and make money.
Yeah, absolutely. And the thing I'll stress too about the Airbnb example, VRBO, whatever, Kevin, you said it, you have to do the work. You have to do the calls. You have to do this is where it gets sticky. Like you can't have a management company doing all that stuff for you and then say you're active in that business. So again, know the rules before you get into the real estate world, but it can be a great investment. And that's what we're about. We're about great investments that increase your net worth, the economic value, and then the tax challenges will follow. But it's most important that you're making good investments when we talk about this. So we could talk about rental real estate forever. Again, check out Flight 52, Gina Roth, and Flight 91, Micah Porter, more on those. And we're happy to help as well. You can contact us, Kevin@leadingedgeplanning.com or Bailey@leadingedgeplanning.com, Bailey. So flood them with your real estate active, passive questions. They love to answer all the good stuff about accelerated depreciation. But Kevin, what do you think? Anything else on the real estate world? That's probably the most common situation that we see.
Yeah, so I do want to comment, Charlie, that real estate is a preferenced item for tax. And the reason I say that is because if you have a rental real estate and you're making some money in real estate, you can actually have depreciation shield offset a lot of that income. And therefore, that is a good thing. And we do think rental real estate is good if you're a person that wants to do rental real estate. Again, lots of podcasts on like, should you do rental real estate? If you don't like rental real estate, don't do it. But if you do and you make money at it, you still have a tax preference with the depreciation shield. So that's absolutely a way to limit tax on income you make. Again, the LLC, what does it do? It protects you. It's an asset protection vehicle, not a tax strategy. So we do think you might consider either an LLC or an umbrella coverage. So anyway, I'm done, Charlie.
Yeah, absolutely. But, a lot of this time we get people that ask us, hey, I've maxed out all my accounts, maxed out my 401k, my backdoor Roth, if that's applicable. They'll say things like, I need to go into real estate now. And then we have that conversation of, well, do you really? And do you enjoy these types of things? Some people do. And again, some people do it really well, and it can be a great investment. But for me, Kevin and Bailey, I'll tell you, I did not enjoy it at all. And so it was, it's not a passive activity. The passive word is a completely different definition the IRS uses for income, but you're going to do some work if you've got more than a couple rental properties. But again, if you enjoy that, some people do it really well. It's can be a great investment, can be a great side gig to help you produce retirement income in the future. But it's not a panacea, and it's not what it looks like on Instagram most of the time. So those are the things I'll think about. That I think about when it comes to real estate. But is there anything that you all hear? I don't hear this too terribly often, but sometimes, again, we're attracted to this complexity. Hey, wealthy people do these things, therefore I'm going to do it. And that's probably not a great way of thinking, but nonetheless, what about a holding company? Is there ever, I don't see this as often, but is there ever a real situation for I've got a holding company that's for these LLCs and yada, yada, yada. But anything on that, Kevin, Bailey, what do you think?
A holding company, what's it holding?
Yeah.
And is it holding something that's going to make money? You can have an LLC with a limited partner and then another LLC. They're all tied together. You have this great elaborate, I'll call it a scheme, the British scheme, as in it's a positive strategy. But still, what's it doing for you? Correlation is not causation, Charlie. And that just means that you take a drug and you start losing your hair, like most of us dudes do. And did the drug actually cause hair loss? Well, people always say in the studies that it did cause hair loss, but is it really the cause, or is it just something that happened? So I bring it back to the rich people. Hey, the rich people have a lot of stuff. Is it really the cause of why they're rich, or is it just something that is being sold as, hey, if you do these things, you'll be rich too? Mm-hmm.
Yeah, absolutely. Bailey, chime in if you got anything to add on that. But yeah, oftentimes if you are, ultra high net worth, people might sell you strategies just because they want to, I don't want to say pretend, but because they feel like they need to add this complexity so that they're perceived as adding value. It's not always the answer. But Bailey, any thoughts on those in general?
If you don't need it, it's going to create more headache. That's another tax filing, potentially more LLC fees. There's usually a state annual fee. So if you don't need it, it's just going to eat away at your profits.
Yeah, absolutely. So, but we've covered a lot today. To rehash really quickly, LLC is best for asset protection. It's not perfect. There are some other things that you need to do. It's not bulletproof, I should say, but it is probably recommended by most attorneys when you start up some kind of side gig or business. There are other things like good record keeping that Bailey talked about. The tax, LLC tax, not really related. LLC, not a tax strategy. LLC as far as rental properties, we talked about that quite a bit. And what are the real tax advantages of rental? Kevin, it's like you said, that depreciation to me, which is kind of like deferring those gains, if you will, a little bit of analogy there. Deferring gains in a 401k could be similar to that. Any other LLC gotchas, myths, misunderstandings that come to your all's mind?
Charlie, I would like to just kind of follow up with the idea of hey, it sucks paying tax with ordinary income. We know it's a bad feeling. We have seen lots of airline people get very wealthy over the years, and they do pay tax on their ordinary income. It stinks. They can lower their income through deferral, 401k. You can talk about Top Hat. You can talk about market-based cash balance plan, HSAs. There's all of these items. There are parts of the tax code that are very favorable for assets that make money. I'll give you a few examples. The preferenced item are equities. They're taxed at capital gains when you sell them. Their dividends are taxed preferentially. If you have money in Roths, again, that's a great strategy to build wealth in a Roth. Real estate, oil and gas are both tax preferenced items. Tax exempt interest is a thing. Again, sometimes the returns are not that high. We really believe at Leading Edge, Charlie, it's in our DNA that you're always doing things to improve your financial situation. And just saving on taxes, although one item, and we think it's important to have your wealth pay less tax, but that income coming from work, there's just not a lot of great strategies to reduce that painful income tax from work.
Yeah.
So that's my final comment on that.
I like it. And there's no easy answer is what I hear you saying as well. There's no easy answer. There are some tough answers. And the tough answers are balance. And we did Flight's podcast 123 and 124. Check those out. About talking about Roth strategy, some of the new changes. And those are tough because you got to balance, and we use the word in those podcasts a lot. You got to optimize this balance between what tax I'm paying now versus in the future. And that's not sexy, Kevin and Bailey. It's hard. It's like, but that's really where you can kind of make progress, is thinking that way, because you can't get so emotional. I shouldn't say you can't. You can get emotional, but use caution. It is emotional. Use caution for letting your emotions drive you into just this all or nothing. Like, I'm not paying taxes. I'm deferring this. And then all of a sudden you get into retirement and it's still painful, still a pain point. So that optimization, I hate to use that word, but that's, the balance that we're trying to seek. And it's not easy. There's no easy answer. But Bailey, any final closing thoughts on your observations here?
I would also encourage people to consult professionals before making the decision. Talk to a lawyer, a CPA. It's easier to help a client think through it before the decision is made than to say, well, you did this, here are the consequences, here's the extra return we need to file, stuff like that.
Absolutely.
Yeah. And I'll just tell you this, Charlie, final comment for me is that when a pilot tells you they're going to be starting a business, ask them how you're going to make money. That should be the question. How are you going to make money? And then you can even tell them, sounds like you're going to pay more tax, because if you make money in your business, that's really good.
It is.
That's good. Yeah. That's not bad.
Yeah. We've had some pilots do some amazing things. Ethan from Strong Bags, very successful side gig. A lot of the pilots are carrying around his bags and other businesses as well. So they're making money in their side gigs, which is awesome. And, but there's going to be some more tax with that as well. So that's all right, though. They're economically better off. But right. Well, awesome, y'all. Thanks for your tax knowledge, tax expertise today. Hopefully we we alleviated some of the misunderstandings and myths about what an LLC does and what it doesn't do. And so I think that's really important. And, a lot of people out there just don't seek complexity because some other wealthy person has done it. Think through what you really want to do. And if that means you fly an extra 2-day trip every once in a while, that's a good side gig as well, right? That's a good way to make some extra money, keep things simple, if that's what you want anyway. But, well, thank you very much, Kevin and Bailey. Thanks for being on the Pilot Money guys and gals today. We loved it. Kevin's got some closing comments.
No. What about Bailey's call sign?
Bailey's call sign. Oh, yeah. Let's do this. Bailey's got to have a call sign. We're going to have a naming party at this very moment. And Kevin, what do you got?
I got nothing.
All right. Let's see. Uncle Sam, Tax Cave, Savant, something Cajun. The Cajun, we got Bailey.
Yeah, the Cajun.
The Raging Cajun. Raging Cajun Alimon. How about that?
Yeah. Okay, that's good.
Yeah,
does it have to change after I get married?
Yeah.
Maybe that'll help you. You can keep that identity. The Raging Cajun.
There we go.
Loving man.
Living good. How about we just have call sign living good?
Living good.
Aww.
Yeah, call sign living good.
Awesome, Bailey. Well, thank you so much, Kevin. Thank you. Please rate, review, subscribe to our podcast, share it with other folks that you think may be useful. We appreciate that so we can reach more people, and see you next time. Thank you very much. Hello, Pilot Podcast family. Charlie here. I just wanted to share with you something we've just recently developed. In the show notes, you're going to see the Pilot Wealth Index. We want you to check it out, give it a shot. It's a quiz, a short questionnaire that allows you to understand, are you on track? We have a lot of people that say, hey, we just want to know if we're on track. Are we where we should be at this stage of our flying career, airline career, whatever it might be? How am I doing? Am I close to my peer group? Am I behind? Am I ahead? We've developed some questions, some metrics that we think if you go through this and check it out, answer the questions, you will have a very good idea of where you stand. We developed the questions that give an indication of, are you doing the right things you need to do to be prepared for an eventual retirement, and that one that can be profitable for you. So check it out in the show notes, the Leading Edge Pilot Wealth Index. We hope you give it a shot. If you have any questions at all, reach out. Happy to help. Charlie at leadingedgeplanning.com. Again, that's Charlie at leadingedgeplanning.com. You can call or text me on my cell, 865-328-4969. Thank you very much.
Thank you for listening to the Pilot Money Guys podcast. Please subscribe, rate, and review on iTunes or wherever you listen. We are grateful for your reviews because they encourage others to listen in. Visit leadingedgeplanning.com to learn more and subscribe to our newsletter. Leading Edge Financial Planning, LLC, LEFP, is a registered investment advisor. Advisory services are only offered to clients or prospective clients where LEFP and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.